Hello and welcome to Cboe Volatility 411 for Friday. My name is Dan Deming and I'm with KKM Financial. Well, expiration today, quadruple expiration. We saw a slight markup in the SPX. Now we're seeing the SPX drift lower, so not too much from a realized volatility standpoint. VIX currently running around a 13.5 level. We're seeing at the low end of the range, and as I talked about that realized volatility, I think it's very important to point out that we continue to see short-dated realized volatility compress, and I think that's a driving factor in why we're seeing the VIX cash trending lower as well. 10-day realized volatility, that's what the market has moved in the last 10 trading days, 4.4%. So once again, we continue to see this compression in short-dated volatility. Couple that with the market holding up here near the highs, and I think that's why we're seeing the VIX cash trending lower. However, let's look at the futures for a second. That front month future is maintaining a significant premium to the VIX cash, actually up on the day even though the VIX cash is lower. So what we're rolling into a new expiration cycle, but I think you've got a couple of things being priced in here possibly when you look at the futures curve. Number one, the weekend effect, and number two, the fact that the market did move significantly last weekend, so maybe that's keeping a bid under these front month futures as we move towards the weekend once again this week. VVIX, measure implied volatility in the VIX options, 95.5. Elevated, but it's down from the 105 that we saw a couple days ago when we did see some selling pressure on the SPX. So once again, we are seeing the VVIX holding up here in the mid to upper 90s. And Mike Palmer pointed out yesterday some back month call buying going on. And once again today, we're seeing call buying a little bit more in the front term or the near term. October out of the monies, and also November at and out of the monies when you look at the 17 strike on November, the 21 strike on November, and the 26 strike in November. Next week, closing in on end of the quarter, end of the month, and end of the quarter. So I think that's going to be significant when you see some repositioning of some books here as we close out the quarter. Couple that with the market at near all-time highs, and the Fed is free to speak next week. So we're going to probably get some narratives from the Fed officials after this meeting. I think that could influence the vol structure as well.